Hey everyone, welcome back to Chipstock Investor. I'm Casey.
And I'm Nick.
Nick's going to be walking us through some of the results from Qualcomm's most recent earnings. And this is part of a bigger segment that we did on auto and industrial chips over on Semiconductor Insider. Over on our Discord server, we have been having live events a couple times a week to go over all of the earnings reports that have been coming out. And this week we focused on auto and industrial chips specifically. We're running a sale for our Semiconductor Insider membership, only $90 a year. That's 25% off an annual membership. You can find the link in the description below for that discount.
Yeah, and in fact, Semi Insider, even at $10 a month, may not be long for this world. So get in now. Tell your friends.
With that said, let's talk about Qualcomm's earnings.
We'll be looking here specifically at trends for the consumer market, of course, Qualcomm and smartphone in particular, as well as some new growth drivers for Qualcomm like PC and auto and industrial chips, which is their IoT segment. Here's Qualcomm's inventories for Q2 fiscal 2025. That's the period that ended in March for Qualcomm. So corresponds to Q1 of the calendar year. You can see the further decline in Qualcomm inventories from the end of fiscal 2024, which ended about 7 months ago now at this point. Roughly $250 million drawdown in inventory. So more positive signs that the semiconductor industry is getting itself in better health as those inventory levels come back down to more normal levels. Qualcomm's financials specifically. Here's the slide they provide. Draw your eyes up to the top of the screen there. Revenues in the March quarter, $10.8 billion, up 15% year over year. Pretty fantastic revenue growth. And you can see the specific end markets broken down as usual for Qualcomm under the QCT subheading. Revenues for QCT handsets, that's smartphones, $6.9 billion, up 12% year over year. Again, not bad. This is much like the PC market. It's an ex-growth industry. On average, just low to mid-single digit growth, but highly cyclical. When you're in the midst of a growth cycle, you would expect to see this kind of low teens growth rate. So that's good news for the smartphone market. Automotive and IoT, Internet of Things. Automotive, once again, hitting new record sales, almost 960 million, up 59% year over year. Qualcomm gobbling up lots of market share in the automotive industry. And then IoT, that's the segment that's been struggling in the last year or two. For Qualcomm, IoT includes the new Snapdragon X chips for laptops. So that appears to be a nice new growth market. We'll get to some comments on that here in just a moment. But it also includes a lot of new industrial IoT markets that Qualcomm is starting to invest heavily in. They had that presentation back in November. They think there's going to be lots of market opportunity for things like industrial robotics, like factory robots, cobots, manufacturing arms, lots of processing power needed to enable next-gen manufacturing. And so that's also included in IoT, and good to see that it is finally back in year-over-year growth mode. Guidance for Q3, because perhaps you noticed Qualcomm stock down a bit after the earnings report. The guidance was a little lower than expected, and it seems the market was focused on the sequential decrease from Q2, the 10.8 billion revenue, to the range of 9.9 to 10.7 billion. That's primarily what the market got hung up on. That guidance for Qualcomm's revenue, it implies a wider range than usual, but 5 to 14% year over year growth for revenue. And that includes some currently minimal expected effects from tariffs, but I think we should just imply from this that management was being cautious with this guidance just in case. Earnings per share on an adjusted basis, again, a pretty wide range, but about 11.5 to 20% year over year growth is the expectation. So still getting good operating leverage for the business. And they did say they are going to be increasing their capital return to 100% of free cash flow for 2025. So lots of stock repurchases are expected. And perhaps this was driven by the recent decline in the stock price over the last 6 to 12 months during the semiconductor cyclical downturn. So that's good to see Qualcomm is seeing value in their own stock and bumping up that capital return to 100% of free cash flow. But specifically, I promised we'd come back to the PC and automotive segment of the business. So remember the new laptop business for Snapdragon X Elite chips. They reiterated their guidance for $4 billion in revenue from that by fiscal 2029, and then $8 billion in automotive revenue in fiscal year 2029. So they're expecting about a double in automotive revenue. Once again, expected to double from this year, 2025, to fiscal year 2029. Really fantastic new end markets for Qualcomm building off of the smartphone core. And so our final takeaway here is after coming off of the peaks last summer, last July, last August, Qualcomm stock looks like a pretty good value again. Bear in mind, this is not going to be your fastest growing semiconductor stock. This is a growth and income play, but we think it looks cheap. Management thinks it looks cheap. And barring any massive disruption from geopolitics and the trade war, we think Qualcomm is sitting in pretty good shape right at the moment. So we have personally no plans to add, but we have a full position already, and that's why, in case anybody is wondering.